Welcome to today's market report.
European stocks steadied at 6-week highs on Thursday as buying of defensives and growth stocks helped offset losses in minus and disappointing earnings forecasts, including from software major SAP. Sentiment was also subdued by renewed concerns about China's property sector after the collapse of the $2.6 billion asset sale at indebted developer China Evergrande Group. After declining as much as 0.6%, the Europe-wide Stoxx 600 index ended down 0.1% at 469.71. A European equity strategist at Bank of America had earlier this month set a year-end target of 420 for the Stoxx 600, implying a fall of about 10% from current levels. European miners, which have a large exposure to China, shed 3% as iron ore and base metal price plunged. UK-listed shares of Anglo American fell 2.7%, even though it reported a 2% rise in overall production in the third quarter. Mining stocks have been unable to shake investor concerns, sparked by yet another twist in the Evergrande saga, according to AJ Bell. Data on Wednesday showed Eurozone consumer confidence fell by 0.8% in October from September. Company after company has warned that supply issues and price hikes aren't going to be a flash in the pan and are going to impact earnings going forward. Europe's most valuable tech company, SAP, dropped 3.2% and was the biggest drag on the Stoxx 600, despite positive third-quarter results as traders were unimpressed by the company's outlook, particularly its licensing forecasts. Swiss engineering and tech company ABB tumbled near 6.2% after it lowered its full-year sales forecast and warned of shortages of components, while Sweden's AB Volvo fell about 0.4% after it said chip shortages hampered production of its trucks. Nordic Semiconductor plunged 12.4% after its core earnings fell slightly year-on-year and the company warned of rising costs. There was no relief for banking stocks either. The sector fell 0.4%, even though UK's Barclays and Finland's Nordea reported upbeat quarterly results. Spain's lender-heavy IBEX index slipped 0.8%, the most among regional peers after downbeat earnings at Bank Inter weighed. Defensive sectors such as personal and household goods index rose 0.8% on the back of Unilever's third-quarter earnings beat. Luxury stocks were also higher after Birkin bag maker Hermes rose 1.4% on strong quarterly sales. Cartier owner Richemont advanced 0.4% after HSBC raised the brand to buy from hold, citing its leadership and momentum in the jewelry industry. The British pound edged lower, stores around 138.11, loses 0.09%. The market sentiment is a mixed bag, depicted by falling European equity indices. At the same time, all US stock indices post moderated gains, except for the Dow Jones Industrial that is losing 0.24% due to worse than expected IBM earnings. Furthermore, the oil rally stalled, while Evergrande's worries surround the financial markets once more, as its shares plunged 11.6% after a $2.6 billion stake sale fell through and the risk of a possible spillover remains. Safe haven currencies like the US dollar and the Japanese yen rose against most G8 currencies. The dollar index is up 0.02% at 93.62, while the US 10-year Treasury yields rallies 4 basis points up to 1.673%, almost 10 basis points short of 2021 high. The British pound stalled once again at 138.38 resistance for the third consecutive day. Investors' bets on Bank of England hiking rates had increased since November the 9th. Two policymakers expressed concerns about elevated prices, signaling that the BOE will step up and act to curb inflationary pressures. However, despite what the UK Central Bank has been vocal about inflation, there are some variables that the BOE has to account for. COVID-19 cases are increasing, and with the furlough program coming to an end, some bank analysts and strategists are starting to become more neutral on the British pound, according to Bloomberg. Moreover, the Northern Ireland Protocol discussions between the US and the Eurozone threaten to begin a trade war, severely hurting the UK economy. The euro has put an end to a 3-day recovery and remains moving back and forth between 116.30 and 116.50, aiming at 170.50 next.
This is today's market news. Thanks for listening. We'll see you next time.